Yo, what's good, guys? What's up? What's up? What's up? Hopefully, you guys have had a good day, bro. But yeah, FOMC starting in what, like 6 minutes. So okay, now for the people that wait, let me first of all let me screen share. All right, so excited. I'm not gonna lie to you, bro. I'm typically never excited about FOMC. I don't really care what happens with it, but this year, or not this year, this month's FOMC is gonna be something. All right. So yeah, I'm excited. All right, guys. Now, all right, bro. Come on now, bro. Okay. um. Okay. So for the people that are new to trading FOMC, or maybe just new to trading in general, there's okay when it's an actual FOMC thing, there's gonna be two reports. All right. There's gonna be a 2 p.m. FOMC, right, which is just like a little statement, whatever, nothing crazy. And at 2:30, which is 30 minutes after 2 p.m., I mean, obviously after the FOMC starts, is when Powell is going to be speaking. We're going to be trading after Powell is, or once Powell is speaking. All right, guys, we will not be trading the 2 p.m. move. All right, now in 5 minutes from now, in exact wait, let me live trade on YouTube. YouTube, what's good, guys? One sec. Let me put out that I'm live on YouTube. 1 second. Okay, hold on, put it out over here and over here. Fingers crossed we do good with this year's or this month's FOMC, because this one is going to be important. This is going to change everything. Anyways, so what I was saying, guys, is what was I saying? Oh yeah. So in 5 minutes from now, we're gonna have about 3 to 4 really, really big candles. I'm gonna say, yeah, like 3 big candles at 2 p.m. So the candle from 2 p.m. to 2:05, the candle from 2:05 to 2:10, and the candle from 2:10 to 2:15, they're gonna be really big. And trust me, you're gonna be tempted to trade it, but don't. All right, guys, I do not suggest trading it. The reason I'm saying it is because the first move of FOMC is typically very, very uncertain because it's a statement, right? It's how the market reacts. People buy it, people sell it. You know what I mean? It's the whole deal. But what we're gonna be doing is we're gonna be reacting to it. We're gonna be seeing how the market moves. Wow, the reason I'm starting the live a little bit earlier or way earlier than the actual FOMC, which is at 2:30, is because I want to prepare and I want to kind of make a game plan as to what we're gonna do, what we're gonna be sizing, if we're even gonna trade it, what we're expecting, and so on. All right. So yeah, we're gonna see how this goes. All right, guys. Now, one thing I will say is, guys, any trade that we put out today, there is not going to be like the risk management behind it is going to be horrendous. All right, guys. Once again, we're not really trading any fair value gaps. We're not trading our strat. We're not doing anything. We're just going to be trading with the momentum in the market, with what Powell has to say, whether it's the basis points of 25, the rate cut, 50, or no rate cuts at all. All right, which is also going to be very bearish. All right, guys. So we're going to see exactly what's going to happen. And any trade that we find or any trade that we get, hold on, my cat is in the way, bro. Get out of here, bro. Hold up. Okay. So any trade that we get is going to be a very, 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 very risky trade. All right. So yeah, I don't want to hear anyone saying here, oh, but dude, I blew my account. No, it's either we pass these accounts or even get a payout, or we blow these accounts. There's no in between. All right, guys. So yeah, if you guys don't want to be touching your PAs, just trade evals. All right, let's get some more past here, and we'll see what's gonna happen. For me, I'm gonna trade a few accounts with very light size. I'm not really trying to blow an account here, you know what I mean? But I am trying to make some extra money towards the payout that I'm gonna be requesting very, very soon for this month. You guys know we have been on a beautiful 3-week winning streak starting today. The 3-week winning streak starts. So hopefully we can continue it, with today's trade. But yeah, I'm gonna be requesting a very, very nice payout. Probably after today, if I don't blow any accounts, of course. but yeah, we'll see. Now, what makes this month's FOMC way different than the rest is because we need rate cuts. Like it's gotten to the point where the last rate cut that we had was, what was it? I think last September. I think. I don't know. It's a lot. It's a long time, right? So we haven't had a rate cut in months, or in the last 10 months. That's when it was. We haven't had a rate cut in the last 10 months, and we need it now more than ever, which is why pretty much 95% of the market is expecting rate cuts. Hence why I believe we're priced in, because, I mean, once again, buy the rumor, sell the news. You know what I mean? So yeah, we're going to see how that goes for sure. But yeah, anyways, FOMC is gonna start, or the statement is gonna come out in about 1 minute, or 1 minute and 20 seconds if you want to be exact. But like I said, do not get tempted by trading the first 3 candles. Trade only after 2:30. All right, that's when Powell is gonna be speaking. All right, guys. So yeah, just so you know. So yeah, right now, like I said, I'm gonna be watching the first thing. I'm gonna see how the market reacts, even to see even if the market wants to move, which I think it will. And however it moves, we're gonna start forming a game plan, start getting the sizing in play, and everything. All right, guys. So yeah, we're gonna see. You're shaking. Oh, come on now. It's not okay. No, it's not. It's not like that either, bro. Come on now. Like it's just gonna make the markets a little bit more volatile. You know what I mean? Just a little bit more crazy. But yeah, if you guys are looking at your trading view right now, you guys might notice that the candles are gonna start going crazy. If you guys are looking at your trading view, you guys are seeing the current candle just going absolutely nuts right now. All right, it's normal. It's normal. All right. But yeah, you ready to full? No, I'm not full pointing, bro. I'm doing the complete opposite, bro. I'm gonna be trading like 3 contracts, 3 to 5 contracts, so I can make something. You know what I mean? But yeah. Yeah. All right. So the closer we get to FOMC, which is in the next 10 seconds, if you guys look at Tradevate, it is going like insane. Like this thing is literally having like a panic attack. Do you guys see it? There we go. All right, so let's see what FOMC does. Remember, do not get tempted by the first few candles. These candles, they're not going to be important. We're looking for the 230 candles. All right. So we're going to see exactly what we do here with FOMC. It seems like it's coming out bullish for now, but that does not mean that we're going to get rate cuts or anything, right? It's just the statement coming out. So we just need to wait. Bro, my cat keeps jumping on my table. We just need to wait for the 230 move. All right, guys. So yeah, like I said, do not trade this first candle. All right, guys. Let me open up the window real quick. There you go. All right. What time frame? It doesn't really matter. I mean, I'm on the 5 minute. You can see it right here. But yeah, the time frame doesn't really matter when it comes to FOMC. Just trade the momentum. You just blew your account. All right, bro. Why does your window sound like that? I mean, dude, I don't know. I push it up. It just does. Let me see. The Fed lowered interest rates by 1/4 percentage point as expected. All right, cool. So I guess the rate cuts did happen, but once again, we're going to be waiting for what Powell has to say because that's what's going to move the market. We're going to be waiting for the 230 move in the market. All right, guys. So for now, I guess, you know what I mean, for the next 30 minutes or so, we can kind of just sit back, just, you know, I guess answer some questions or whatever, and obviously create the game plan. All right, guys. But yeah, once again, the first move, don't get tempted by it. It doesn't really matter. This always happens with every FOMC. The 2 p.m. move it'll move the markets, but it won't do anything like crazy. But whatever Powell has to say, which I will be putting it up on stream, with whatever he says, we're just gonna be trading it, right? So if he says something bullish, we're just gonna go long. We're not gonna wait for an inverse. We're not gonna wait for a continuation model. We're just gonna trade with the momentum. That's what I'm saying today. Is gonna be riskier and a lot more different than usual because obviously we're not trading the market itself, like the technicals. We're trading like fundamentals, right? We're trading news. All right. But yeah. Where do you hear him speak? You can watch it on YouTube. But if you're gonna be in the stream here, I'll just put it up on YouTube, like on the stream, and we can all watch it together. And I'll guide you guys through what's bullish and what's not bullish. Mainly what we're looking for is for him to be talking a lot about rate cuts, right? The more he talks about rate cuts, the more the market goes up. If he talks about not cutting rates yet, expect the markets to go down. All right, put it on. No, yeah. Remember, like I said a million times, it starts at 2:30. All right, that's why we're not in any trades right now. I don't trade the. All right, bro. Through blast. Yeah, I am. Look at gold. Look at gold, dude. I know it's just gonna be. I'm assuming going. If interest rates are going down, the dollar is gaining value. I'm assuming so. Gold should be going down. Whoa, what the yo, okay. Yeah, no, it did something. It definitely did something. Yeah, it definitely went more down than up. But I mean, it's holding up so far, so I don't know. A little bit down, a little bit. Yeah, I think a little bit more than a little bit. but yeah, bro. Anyways, let's focus more on NQ here. But yeah, now in the meantime, I'm gonna try to find some levels that we can try to get an idea to work with. Once again, when FOMC starts, the market couldn't care less about a line on your chart nor a gap in your chart. But I mean, we can always use it to get an idea as to what's happening in the market. So yeah, let's see what can happen here. So In terms of levels, I kind of already have everything marked out. I mean, to the upside at least. I mean, we have all-time highs here, some internals here, the Asia here, I believe. Yeah, this is Asia, right? No, that's London. Asia and London, same thing. Right, but for the most part, let me go ahead and mark out these lows here because we are gonna need these to know exactly, if we do end up taking a trade today, we're gonna need to know where we want to be taking profits. All right, and I feel like in terms of levels, I'm pretty much done. Like I don't really have anything here to really mark out. So yeah, if you guys do want my chart, I'm gonna send it over in the chat. Let me send it over on YouTube as well. Yeah, YouTube, what's good, guys? There you go. If you guys do want my chart with the levels and everything that we're gonna be using for the FOMC meeting itself at 2:30, I sent you guys my chart over in the chat. All right, guys. So if you guys do want it, I'm meaning to look at ES. It's the same thing. It's the same thing as NQ. Nothing surprising here, at least for now. But yeah, apparently they or not apparently they did end up cutting the rates by 0.25, which is what the entire market was expecting. We're not really getting the craziest move, and that's normal. I did tell you guys yesterday and the day before, and in fact, I told you guys last night what exactly I was expecting for FOMC. Because if it came out bullish, which is exactly what the whole market was waiting on, we're gonna be priced in, right? It's why if you look at the daily time frame, it's buying until FOMC. You know what I mean? So yeah, but like I said, we're just gonna wait to see what Powell has to say. And whatever he has to say, we'll go ahead and trade off that. All right, guys. So once again, at 2:30. All right. In the meantime, let me go ahead and put this out over here. On my YouTube chat. Let me pin it real quick. Pin message. All right, cool. All right, so let's see what we got here. So far we are creating somewhat of a gap. Now that we know that we got the rate cut by 0.25, I'm not gonna say it's percent, but by 0.25. We're gonna go. We know that we're mostly bullish for now. Keep in mind, like I said, anything can happen while Powell is speaking. If any of the people in the speech ask any barrier or any question that the market doesn't like, although we did get rate cuts and although it is bullish, right, the markets could sell off like crazy. So keep that in mind. All right, guys. But yeah, in the meantime, I'm gonna go ahead and sit back and just answer some questions, chill with you guys for the next 20 or 25 minutes. And once Powell gets on, I'm gonna go ahead and put up the stream, that live stream on the screen, and then we'll just watch it. And whatever we do, I'll just tell you guys whether it's bullish or bearish. And if you guys want to long it with me or short it with me, we can go ahead and take the trade together. Now, one thing I will say, I forgot to mention, guys, if you are currently at work or you're currently really, really busy and you're probably wondering, hey, are you going to alert it? No, I cannot alert anything in this market. All right. And the fair value cap is gone. Not that it really matters, but guys, I cannot alert anything for you guys in this market because, I mean, if Powell says something and the market reacts instantly, by the time that I type up NQ longs at this price target here, stop loss here, it's already going to be hitting the price target or the stop loss, right? So yeah. Let's see. I thought ES1 and NQ1 were always up to date on TradingView. Yeah, they are. When they cut, we usually dump. No. When we cut, we pump. When we don't cut, we dump. They shifted? What do you mean? What was that 24.632 level? 24.632. Oh yeah, it's this one right here. If you go on like the 15 or the 30 minute, maybe on the 30 minute you can find it. Yeah, it's kind of like a weak but still valid level of liquidity here. Because you can notice that the market, we hit all-time highs, we sold off, we paused, we pumped up into here, and we sold off even harder. So we have the main high, lower high, lower high. So this is going to be not the strongest level of liquidity, but definitely a valid level of liquidity. All right. My ES1 and NQ1 levels moved and don't match the new. What you're going to do is real quick on your trading view, just click here. If this is not highlighted, it's probably why. So right here, BADG, just click this here and make sure that it's highlighted. If not, it just won't work. It is. I mean, it's aligned with me. Yeah, price is currently trading at 470. Yeah, we're at 470. So I don't know. Gold is going crazy. Dude, I can imagine, bro. Oof. Bro, I might even trade gold over NQ today, bro. I don't know how it works. I'm not gonna lie to you guys, but damn, this thing is moving so much more than NQ is. Because NQ it's not doing much. You know what I mean? It's really not doing anything. Let's be honest here. But wow, a gold is moving. How's Bitcoin doing? Bitcoin is not really doing much either. Check BTCI. Yeah, nothing crazy. JEPQ. Nothing crazy yet. Nothing crazy yet for sure. But yeah. What would the stop loss be? Oof. There's no stop loss today, bro. Dude, we're trading news. It's either you pass that account or you get a payout or that account is gone to dust, bro. Yeah, there's no stop loss today, bro. I hate to break it to you guys, but yeah, when you're trading FOMC, I mean, dude, what are you gonna do? Put a 30-point stop loss, dude? We're seeing 30 points by the millisecond. You know what I mean? So yeah. Pretty much no technical analysis today. Yeah, that's what I'm saying. It's pretty much all fundamentals, right? So, like I said, right now we're currently gonna wait. We're gonna wait 20 more minutes until Powell starts speaking. Whatever he says, we're gonna trade based off what he says. So if he says, "Oh, guys, we're planning on continuing to do rate cuts as we go on," and blah blah blah, that news is bullish, right? Because obviously rate cuts is a very bullish thing, right? Now, if there's no gap, there's no levels, there's nothing, but the market is reacting to what he's saying, we're going to work off that, right? We're going to look to take profits really quick, whatever, right? But guys, the trades today, obviously, they're not going to be as they usually are. You know what I mean? Typically, I'm like, oh, guys, we have a fair value gap here. We have a DOL sweep. No, I promise you guys, when Powell was speaking, the markets do not care about drawn liquidity. They do not care about a fair value gap. They don't care about anything, right? The market's going to be getting priced in towards what Powell is saying for the future plan of interest rates and the economy in general. All right, guys. So yeah, keep that in mind. ES gap, like I said, the gap doesn't matter. Doesn't really matter. We're not gonna use it. But yeah. Now, if you guys do not like the sound of that, obviously you do not need to trade it. All right. Let me see. Hey, Blastoise, what broker do you use to buy JEPQ? I use Weeple. But any works. Yeah. Why the SMT? We don't really have an SMT. Remember, maybe NQ is going a little bit more lower than ES is because the Nasdaq is probably holding other stocks out there that might not be included with the S&P 500, right? Keep that in mind. So on a PA, we shouldn't trade. I do not suggest it. No. I do not suggest trading on a PA today, or especially for FOMC. I have 4 days to blow this account or pass it, I'm assuming. Anyways, so it resets automatically. Yeah, bro. I mean, if you want, bro, if you're on an eval right now, bro, it's either you pass it or you fail it. There shouldn't be any in between. You know what I mean? The market is moving like crazy. Just use this as an advantage or as an opportunity to either pass it or fail it faster. How much should I go in if I can only lose 840 on my 50K PA account? 840. Like if you do 7, a 30-point stop loss will blow the account. But 30 points in a market like today, I mean, dude, we are selling off about 50 points per half a candle. So do like 5. With 840 drawdown, do like 5 so you can at least have room for the market to reverse on you, just in case. And if it reverses back up into your favor, then you don't blow the account, right? But if you do 7 to 10, if you hit like a 30-point drawdown on the trade, that account is done. David, just take a bonk? No. No. Yeah, dude, we are selling off like crazy. And keep in mind, guys, you guys know we got the 25 rate cut that we were expecting. So why exactly is the market selling off? What did I tell you guys yesterday? Buy the rumor, sell the news. Right. So although yes, rate cut is a super bullish thing long term, maybe not short term. Right? Because remember, look, once again, I explained this to you guys yesterday, did I not? like at night, right? I told you guys, look at the daily time frame before FOMC. Buy, 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 buy. FOMC, why? Because obviously the whole market is expecting 25 BPS rate cut. And now that we get the 25 BPS rate cut, the markets sell off. Buy the rumor, sell the news. You know what I mean? So yeah. Let's see what we got here. All right, let's see. Anyone? Let me catch up with the chat. Anyone have a finance bachelor's in here by chance? I'm 30 with 2 kids, planning on going online for 2 years while working in trouble. I got in trouble a bit when I was younger. Background check and curious. Dude, I'm not gonna lie, bro. I'm not the one to to give you an answer. Actually, I don't even have a bachelor's degree. I can't even say it. Let's see. My trade base shows 13 to 8 max drawdown on a 100K account. How many contracts should I go in with this? You could do like 10. 10. With 10, you can. With 10. With 10 with a 30-point stop loss, you're risking like 800. If the trade goes any more than 30 points in drawdown, it's probably not going in your favor. So yeah, you could do 10. You could do 10. Yeah, dude, we are dumping. We are done for. Whatever Powell says, hopefully it's bullish, bro, because this thing is dumping. Yeah, I'm not gonna lie to you, bro. For the person that asked about the bachelor's degree, you probably have better luck getting the answer that you want to hear if you ask that on like a finance Reddit page. I'm not gonna lie to you guys. When I have something that I really need an answer for, Reddit is always my go-to. So yeah, if in the meantime, since we're not really doing anything for the next 15 minutes, go on Reddit, copy and paste it, and you should get a response in like the next 3 minutes. They're quick with that. I don't know how. Like people camp those Reddit pages, but they do it. At least we're getting away from all-time highs. Yeah, I guess so. If we do end up continuing to sell off to the downside, I'm gonna use this as a very, very nice buying opportunity to get into more long term. What time does Powell speak? He speaks at 2:30 in about 14 minutes. 14 minutes. All right, guys. So yeah, in 14 minutes is when Powell's going to start speaking, and this is when we're going to see the actual movement in the market. All right, this is just based off the statement, the rate cuts, whatever. But we need Powell to start telling us I guess you can say the game plan for the future in terms of what we want to do, how the interest rates are going to go, the rate cuts for the future, and so on. And however the market reacts, we're going to go ahead and react with it. All right, guys. So keep that in mind. Does anyone know if Top Step's 50% consistency rule is end of day or trailing? No, it's end of day. So if you made 1,500 already, you can't make any more until tomorrow. And that's why Top Step evals suck. I don't know why they have that for evals. Do that for PAs, bro. Like, I don't get it. I really don't. But yeah, by the way, if you guys, once again, before we start trading, if you guys haven't already and you guys want to pass some evals today, if you guys want to stack up, remember, Apex is 80% off with code Blaster. So if you guys do want to, stack up on some accounts, you definitely could. All right, guys. Let's see. I accidentally made 2.3. Oh, with Top Step, bro, that's gonna hurt. And the reason I'm saying that's gonna hurt is because any dollar amount that you make above 1,500 for the day, you have to make extra. So it's really annoying. Really, really annoying with Top Step. So yeah, if you made, so look, so what we're gonna do to do the math is look. So to pass the account, you can only pass the account for Top Step in a minimum of 2 days, right? By making 1,500 in each of those days. If you made 2.3K on Top Step in one of those days, you're gonna do 2,300 minus 1,500. So that means that you on day 3. So even if tomorrow, right? Even if tomorrow you make 1,500 and you hit the $53,000 goal for Top Step, they're not gonna allow you to pass until you make an additional $800. It's really dumb. I don't know why they have that. I'm not the one to ask. But yeah, you have to make it now that you're up 13, unless you lose it by the end of the day, which is possible, especially with FOMC. Just try not to blow your account. What was I gonna say? Oh yeah, if you end the day plus 1500 exactly or any less, you'll be fine. It won't be counted towards the extra day. But if you close the day, if the market closes today at 5 p.m. and you close at 2300, you need to make an extra $800 on day 3 or whichever other day. No, Apex. No. Apex does not have the 30% rule on evals. Apex doesn't have any rules on evals. In fact, they don't even have the 7 days. Yeah. No. That's for PAs. That's for PAs. Remember, you need 8 days to request a payout, and you need 30% the 30% consistency rule. But no, for evals, you can make $1 million right now on an eval, and you'll pass it in like a few minutes. Let me see. Is it easy to trade multiple accounts? Yeah, it's super easy. It's literally built into the broker that we all use. Let me see. TPT and Top Step. Well, okay, look. I do believe that TPT and Top Step, MFF, Tradeify, Apex, they're all amazing firms, but they all come down to the type of trader that you are. If you like to make a lot of money and request big payouts, Apex is the one for you. Why? Because you're able to scale up to 20 accounts. If anything, you can even do 40 if you don't get caught. But under the rules, you could do 20 accounts. Apex, in terms of scaling, is the best firm out there. Like, there's no firm that will ever come close to what Apex does, because Apex is the one that makes the most money in the prop firm space, which means that they're able to afford giving out really large payouts. We're talking $1 million payouts. You know what I mean? For those that don't know, Apex has given out the biggest payout, I think, was like $3 million in one payout, which is crazy, right? There's no firm out there that can do that, because there's no firm out there that makes that much money. Now, if you like to request small but quick payouts, do Top Step. Because Top Step, you can only copy trade 5 accounts, and you can only request a maximum of $5,000 per account, which, you know, if you compare that to Apex, is nothing compared to Apex. But if you're the type of trader that you just want quick money to pay your bills or just eat lunch or whatever it is, right? Top Step is the one for you. So once again, it comes down to all preference, whether you like scaling or you like taking quick profits. Just read over the rules on every firm out there, or every well-known firm out there, and just choose whichever one fits you. Regardless, if you trade correctly, no matter which one you trade on, you're gonna make money. You know what I mean? So yeah. TGR is up 400,000. Dude, he was down 100K yesterday, but that's crazy, bro. Really nice comeback. Pretty big sell-off. No, yeah, like I said before FOMC started, do not get tempted to trade anything here. It doesn't really matter. It only matters what Powell, at least for me, the way I trade FOMC. I never trade the FOMC statement. I only trade the FOMC meeting, which is Powell speaking at 2:30. All right, and my cat is on my table again. Yeah, 400,000 is insane, bro. Let me see. That's only on the first 30 days of Top Step. If you're consistent, you can request 100%. Well, remember, if you request 100%, then you won't have that account. You know that, right? So let's say, for example, right, you pass the 30 days and your account is up $5,000, and you request those $5,000, they will close your account. I'm not able to place an order, but my account isn't blown. Make sure you're trading MNQZ, not MNQU, MNQZ5. Remember, we switched contracts yesterday. We're no longer trading MNQU. They closed down those contracts. We're currently trading MNQZ. All right, yeah. Trust me, you're not the only one that had the issue. Okay, just request the 90% LMAO. Yeah, I guess you could do that as well. Yeah, I guess. You know what I mean? But if you're gonna be making that much money, like I said, I don't really have anything against any firm. It just depends on the type of trader that you are. For me, I scale a lot. I like to request way bigger payouts, just a lot less frequently. So if you're gonna make, let's say, for example, $5,000 from trading your model in those exact trades, would you rather make that on 5 accounts and copy trade it, or 20 accounts? You know what I mean? It's all preference, to be honest. It's really all preference. Just go live. Dude, I've gotten asked a lot of times, why don't I trade live? Like I said, I don't trade with like $1 million in an account. If I were to go into a live account, I would probably like put in like 10, 15, maybe $20,000, maybe 25 the most $1,000. But just because I have that much margin does not mean that I'm able to trade or size 3, 4, 5 minis. I'm gonna be sizing the same amount, which will be probably be like 10, 15 micros. But yeah, there's pros and cons behind everything around it, but look, bro, if you're consistent, bro, why trade with your own money? You know what I mean? If you're gonna get paid out by a prop firm more than what you would make on a live account with just extra rules, if you're a good trader, bro, those rules shouldn't really bother you. David RP is looking to work with traders with 10,000. You should tap in with him. What do you mean 10,000? $10,000? Oh, I get what you're saying. Yeah, you're talking about the ad that he had. Like if you have over $10,000 to trade. Oh, bro. Are we taking this inversion? No. We're waiting on Powell to start speaking in 5 minutes. In fact, let me start opening up the stream real quick. Let's see. Let me start setting up the stream. For you guys. Let's see. Powell FOMC live. FOMC. Oh, right here. FOMC press conference. Okay. Yeah, I have it on the side of the screen now, and once it's ready, I'll put it up on stream. Bro, no way, dude. Daniel, are you trading with a 30-point stop loss in this market? Are you crazy, bro? Dude, like I said, this market is the type of market that you trade without a stop loss, bro. It's either you blow your account or you pass your account. Let me see. M and Q is micros. NQ is minis. The M in front of NQ stands for micros. Remember that. Yeah, I will. Oh, share the link to the live stream. I got you, bro. I was gonna share it. I was gonna put it on stream, but here you go. I got you, bro. I got you. How many micros for a new eval? If you don't care about the eval and you're trying to pass it in one trade, do like 20 micros, 15, 20. That shouldn't be bad. David, how many points do you think this will move the market? Dude, we're probably talking 200, 300 points. So I can only trade 10 and Q during evals. Yeah, during evals and the PA. But dude, you should not be trading 10 and Q. Dude, I promise you, before you even click the buy button, your account will blow up. Yeah, I am, Joker. I am. I'm going to stream Powell once he starts speaking, which will be in about 4 minutes. You did 5 and Q. Dude, imagine 10. Like, dude, we're talking like, okay, wait, with 10, okay, wait. So if you're making per point, okay, wait. So per mini, per point on NQ, you're making $20. So 20 times 10, you're making $200 per point on NQ. Dude, before you click the buy button, your account is down the drain. That's just evaporating, bro. Do not do 10 minis. Look at gold. It's not doing much. But yeah. Let me see. Someone DM me saying, but isn't there a rule to not trade FOMC during evals? No, guys. Once again, there's no rules on evals. Like no one cares about evals. Yeah, there is no rules on evals, guys. You could do whatever you want. You could DCA, you can full port, you can trade during news, you can do whatever you want. You can even hedge. If you guys want to hedge FOMC, you could do that. You know what I mean? Except for there's zero rules. There's no rules on evals. I don't know where you guys are hearing this from. Maybe other firms out there might have rules. If they do, yikes. But yeah, TopStep and Apex, they don't have rules. Apex has 0 rules. TopStep has 1 rule, which is just don't make over 1,500 a day, or just don't make over 50% of the profit goal. But I can't trade on my PA. With PAs, you can trade news. I think it was a rule back then that you couldn't, but you can now. I've traded news more times than I can count, and nothing has happened. What's hedge? Okay, so what hedge means is, okay, look, when a very, very important news report comes out, we all know that the market is going to react like crazy, right? Okay, so if we know that the market is going to react like crazy, there's only 2 ways that the market can go, either really up or really down. So what can you do? Well, if you want to guarantee at least 1 eval passed, what you do is you buy 2 evals, you go long on one, you go short on one of them gets blown up, and the other one gets passed. All right, so yeah, that's pretty much what hedging means. All right, just join the premium 5 fresh PAs ready to get funded. First of all, welcome, bro, and fingers crossed I can get you guys a good read in the market. It's gonna be tricky because obviously with what Powell says, not only do we have to understand what he says, but we also need to understand how the market is gonna react. He could say something that's bullish, but if the market doesn't like it, although it's on paper, it's bullish, it can always sell off, right? So we have to be ready. David, how much are you going to be sizing in? I'm going to be doing like 5 micros. I'm just looking to make some money on the side today. But yeah, I'm not going to be doing the 30, 35 point stop loss. I'm just going to size until I believe the trade is not going in my favor and then just get out. All right. And by the way, guys, once again, if you guys are in the stream, I am not going to be alerting. All right, guys, everything here will be all on stream. All right. Is hedging allowed on TradeAway for? Yes. They don't care. Now, can you do it on PAs? No. Now, with PAs, it's going to be an issue. But with evals, yeah, you can hedge. You can do whatever you want. I need $190 to pass my account. Okay, so if you need 190, try sizing with like 2-3 micros, no more than that. If you're going to be trading today. Which, if you're that close to passing, I'm not going to lie to you, bro. Come back tomorrow. You're close enough already. Why gamble it today? You know what I mean? Anything that we take today will be a gamble trade. It'll be the riskiest trade of the month. 1 minute for Powell? Yeah, pretty much. Let me see if they started the press conference. Not yet. Let me go ahead and put it up here on. Can you guys see it on stream? Yeah, right? All right, cool. So I guess we'll just wait for Hey, this is the first time that they ever 70,000 people. It's never been this much. It's typically like 20,000, 15,000, 70,000 people. Holy. And it hasn't even started. But dude, this is the first time that they've ever disabled the chat. Maybe for a good reason. All right, but anyways, Powell is set to speak right now. It is currently 2:30. So whenever he starts talking, let me put on my headphones and see what he has to say. Am I going to trade my PAs? Not all of them. I'm probably going to trade a few, make some extra money. I am going to be requesting a payout very soon, most likely by the end of today. So yeah. Oh wait, I'm not even live. Oh, yep, there he is. I was about to say. But yeah. The chat bot looks like Blast server. Yeah, pretty much. All right, y'all be safe. I'm green. Yeah, bro. Take it easy, bro. Take it easy. But yeah. All right. Now,
squarely focused
can you guys hear it? I know YouTube can hear it, but can you guys hear it
on employment and stable
Discord?
prices
Nope. Okay,
for the benefit of the American people?
One sec.
While the unemployment
I don't
rate
think I'm gonna be able
low,
to have the
it
chart
has
open,
edged
guys.
up. Job gains have slowed, and
about
downside risks to employment have risen. At the same time, inflation has risen recently and remains somewhat elevated.
But yeah, I'll let you guys know if I'm in longs or shorts.
In fact, of our goals,
I was going to
and
say,
in light of the shift in the balance of risks, today the Federal Open Market Committee decided to lower our policy interest rate by 0.25 percentage point. We also decided to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that growth of economic activity has moderated. GDP rose at a pace of around 1.5% in the first half of the year, down from 2.5% last year.
Oh my guys, we're just looking for. Wait, hold on, let me mute it real quick. Right now, guys, what we're looking for is just a very strong reaction in the market with whatever he has to say, and whatever we see in terms of momentum, we can trade towards it. Like I said, I'm not gonna alert it. I won't be able to type it up. But if I say, guys, like, oh, I'm looking at longs, I'm in longs. Obviously, you guys will know. Just be ready. All right, guys.
Participant projects GDP to rise 1.6%.
I would say we're gonna see like
year and 1.
I would say that we're gonna see the actual move in about 10. Oh my, 100,000 viewers. Jeez. But yeah, I'm expecting the actual move to start in about 10-15 minutes. All right, guys. So yeah.
Payroll job gains have slowed significantly to a pace of just 29,000 per month over the past 3 months.
All right, guys, we're just looking for just momentum in the market, right? Don't get faked out with whatever happens in the market, all right, guys?
The labor force due to lower immigration and lower labor force participation. Even so, labor demand has softened, and the recent pace of job creation appears to be running below the break-even rate needed to hold the unemployment rate constant. In addition, wage growth has continued to moderate while still outpacing inflation. Overall, the marked slowing in both the supply of and demand for workers is unusual. In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen. In our SEP, the median projection for the unemployment rate is 4.5% at the end of this year and edges down thereafter. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.7% over the 12 months ending in August, and that, excluding the volatile food and energy categories, core PCE prices rose 2.9%. These readings are higher than earlier in the year as inflation for goods has picked up. In contrast, disinflation appears to be continuing for services.
I'm not talking, bro.
Near-term measures of inflation expectations
see
have
what the market's
moved
trying to
up
do.
on balance over the course of this year on news about tariffs, as reflected in
I'm
both
clicking on
market
window.
and survey-based measures. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation is 3.0% this year.
Chill.
and
I'm
falls
just
to
destroyed my whole setup.
2.6% in 2026.
Free drop?
and
Yeah, I told you guys.
2.1%
Give it like
in
15 minutes for it to like be
2027.
done speaking, and when he starts answering
Our
questions,
monetary policy
that's when the market
actions
starts
are
moving.
guided by our
Give it
dual
time, give it
mandate
time,
to
give it time.
promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to lower the target range for the federal funds rate by a quarter percentage point to 4
Like I said, guys,
to 4.25%.
In the meantime, guys, make sure that if you guys are gonna be trading with me, if I do see anything, just for now hover over the buy or sell button. Because if I say something, you know what I mean, if I'm gonna get in, if you guys are gonna follow, obviously try to follow as fast as possible. All right.
Effects on economic activity and inflation remain to be seen. A reasonable base case is that the effects on inflation will be relatively short-lived, a one-time shift in the price level. But it is also possible that the inflationary effects could instead be more persistent, and that is a risk to be assessed and managed. Our obligation is to ensure that a one-time increase in the price level does not become an ongoing inflation problem. In the near term, risks to inflation are tilted to the upside and risks to employment to the downside, a challenging situation. When our goals are in tension like this, our framework calls for us to balance both sides of our dual mandate. With downside risks to employment having increased, the balance of risks has shifted. Accordingly, we judged it appropriate at this meeting to take another step toward a more neutral policy stance. With today's decision, we remain well positioned to respond in a timely way to potential.
Remember, guys, the market isn't really moving yet, so we're still
We'll
waiting on it.
continue to determine the appropriate stance of monetary policy based on the incoming data, the evolving outlook, and the balance of risks. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate, based on what each participant judges to be the most likely scenario for the economy. The median participant projects that the appropriate level of the federal funds rate will be 3.6% at the end of this year, 3.4% at the end of 2026, and 3.1% at the end of 2027. This path is 1/4 percentage point lower than projected in June. As is always the case, these individual forecasts are subject to uncertainty, and they're not a committee plan or decision. Policy is not on a preset course. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission, and we at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to our discussion.
All right, this is when those questions start coming in, guys. So he finished the statement, which is what we knew already. So whatever these people start asking and the way he responds, that's what makes the market move. So what time is it? Yeah, we're 7 minutes in. So in the next few minutes, we just start seeing like more momentum in the market. So once we see that momentum, we'll just trade into it.
In decades. Does this compromise the Fed's independence from day-to-day politics? And relatedly, how can you maintain the
He tells us
public perception
bullish and
that
bearish.
is
Yeah, I'll let you guys know.
independent with
I
this
won't really
fact?
say if it's bullish or bearish because it's whatever how the market wants to react. But if I like it enough and I want to enter longs at a light size or shorts, I'll just let you guys know, guys, I'm in longs, guys, I'm in shorts, and so on. All right. It will just be easier.
We're strongly
That's
committed
if I get a
to
trade.
maintaining
If
our
I don't see anything, then
independence, and
obviously I
beyond that, I
don't
really
trade
don't
it.
have anything to share.
But just remember, guys, it's this is all like a gamble today.
You and
So
other Fed
if you guys
officials
can't
have
afford to
spoken
lose it,
extensively about the
then
impact
maybe
of
don't trade it.
tariffs on inflation. Although perhaps with many companies appearing to eat the tariffs, tariffs may be impacting the labor market and other parts of the economy instead. Do you see that as a possible outcome here, that tariffs are the reason we're seeing some slowing?
Joe, imagine she's in
the
long
labor
term here,
market,
bro.
rather than in inflation?
That'd be crazy. I'll do that.
You know, it's certainly possible. You know, we're beginning to see, we have begun to see goods prices showing through into higher inflation, and actually the increase in goods prices accounts for most of the increase in inflation, or perhaps all of the increase in inflation over the course of this year. Those are not very large effects at this point, and we do expect them to continue to build over the course of the rest of the year and into next year. And you know, it's also possible and that there may be effects on unemployment, but
Let me see.
I would say if you're looking at why.
David, the video is not needed. Instead, show your screen and audio is enough. What do you guys say? You guys let me know. I'm the one that's just streaming. Regardless, we're still trading. Are you ready? So you guys want the charts or you guys want Powell speaking? Chart. All right, bet. Okay, I'm gonna have it on the side. I'm still gonna be listening to it. Obviously, I need to know what's going on. You know what I mean? But I'll just screen share the thing, and I'll just let you guys know what's going on. So if I'm quiet, it's because I'm watching the stream. But I'll just screen share my
We now see the unemployment rate edge.
chart. I'll just. I guess I just screen share my trading view. Okay, there. But yeah, guys, if I'm quiet, if you guys don't hear anything, it's because I'm watching the stream still.
So I don't think we can say that. What we can say
Actually,
is
let me just screen share this. I feel like
over the course
it'll
of
be like a
this
2-in-1.
year, we've kept our policy at a restrictive
just
level,
share this.
and people have different views, but a clearly restrictive level, I would say. So, and we were able to do that over the course of this year because the labor market was in very
Dude, why does your
solid
profile
condition
picture look
with
like me?
strong job
If I was like an
creation and all
8-bit
those
character, bro.
I think if you go back to April and now look at the revised job creation numbers for May, June, July, and August, you can I can no longer say that. So what that means is that the risks were clearly tilted toward inflation. I would say they're moving toward equality. Maybe they're not quite
I know
out
how to
of
screen
equality.
share
We don't
to
need
have like
know
everything
that.
sharing.
But we do know that they've moved meaningfully toward greater equality, the risks between the two.
Go back to the way it was.
Poles, and that suggests
Yeah, I
that
think
we should be
it's what's
moving in
important right
the
now. Once again, if I
direction
see something, I'll
that's
just
what we did today.
quickly change it. I feel like the stream is more important right now.
Circumstances would a larger than 25 basis points rate cut be warranted? And how seriously was that option entertained at your meeting this week?
There wasn't widespread support at all for a 50 basis point cut today. You know, I think we've done very large rate hikes and very large rate cuts in the last 5 years, and you tend to do those at a time when you feel that policy is out of place and needs to move quickly to a new place. That's not at all what I feel certainly now. I feel like our policy has been doing the right thing so far this year. I think we were right to wait and see how tariffs and inflation and the labor market evolved. I think we're now reacting to the much lower level of job creation and other evidence of softening in the labor market, and saying, well, those risks are maybe not fully balanced, but moving in the direction of balance now, and so that warrants a change in policy.
Colby Smith with the New York Times. Should we be viewing today's cut as the committee taking out some insurance against the possibility that the labor
we just
market
dumped
is
like
at risk
60, 70
weakening?
points
Or
next.
is it the committee's view that the dynamics of a downturn are already in place? I guess I'm just
I don't know.
trying to
I'm
square
not
the
like you
shift
guys.
in the rate.
I might wait for her to finish asking her question, and with whatever the way the market is moving, I might just go off that. That's if she asked the right thing. Let me see.
Yeah, I think you could think of this.
Because the market is trying to move, but it's not like there's not enough data like with the FOMC to know where the market really wants to go. It's like it's moving up and down, but not in a set direction.
Just a little bit, and inflation and unemployment didn't really move much. So what's different now? What's different now is that you see a very different picture of the risks to the labor market. You've seen, we were looking at 150,000 jobs a month at the time of the last meeting, and now we see the revisions and we see the new numbers. And I don't want to put too much emphasis on payroll job creation, but it's just one of the things that suggests that the labor market is really cooling off, and that tells you that it's time to take that into account in our policy.
So just looking at the SEP once again, the median participant has inflation higher than previously expected by the end of next year, and the Fed not getting back to the 2% target until 2028. So I guess I'm just wondering how you characterize the risk to price pressures of kicking off a series of cuts at this point.
Or we just
Yeah,
book
so
that low.
I would look
See
at
if we
it
can
this way.
continue.
We fully understand and appreciate that we need to remain fully committed to restoring 2% inflation on a sustained basis, and we will do that. At the same time, we've got to weigh the risks to the two goals. And I would say since April, to me, the risks of higher and more persistent inflation have probably become a little less. And that's partly because the labor market has softened, GDP growth has slowed. So I would just say that the risks there have been less than one might think. And in terms of the labor market, what we're seeing is unemployment is still low. It's still a relatively low rate, but we're seeing downside risks.
Michael McKee from Bloomberg Radio and Television. I'm a little confused by your explanation of the Fed cutting rates because of unemployment. If you think that most of what's happening in the employment area is related to immigration, which your rate cuts wouldn't address, how do you see that as more important than inflation, which has remained almost a full percentage point above your target?
Well, I was saying that what's happening in the labor market has more to do with immigration than it has to do with tariffs. That was the question I was answering. So I wouldn't say that all of what's happening in the labor market is due to tariffs. I mean, you clearly have a slowing.
Can you turn it up? I got you.
Due to immigration. You clearly have a slowing in demand, which is now perhaps more than that in supply, and we know that because the unemployment rate has ticked up. So, that's what I meant by that.
If I could follow up, every year since 2015, the SEP has forecast that you would hit your target 2 years later. And this year, this SEP says you're going to hit your target 2 years later. 2% does not seem to be in sight. Does that suggest that the 2% target is not really achievable? And does this present any credibility problems for you in telling people that that's what you're going to do if you can never reach it?
Well, I mean, you're right. It does say we're going to get to 2% inflation in 2028 at the end of 2028.
All right, this guy's asking the right questions.
That's literally how you put the projection
I think this is what's going to move the market. The market's already squeaking lower because of the inflation. So let's see.
to create over the course of the SEP, time frame, 2% inflation and maximum employment too. So that's all that is. No one really knows where the economy will be in 3 years, but the nature of the exercise is to write down policy that you believe would return to the 2% goal over at least by the end of the exercise.
Yeah, we're seeking lower right now. And there's not enough momentum though for me to take it.
With ABC News. The latest inflation report shows that prices are still going up across key categories for many households, including groceries. What will the Fed do if prices pick up more?
So our expectation, and you can see this consistently through the year, has been that inflation will move up this year, but that the
What do you mean not enough momentum? I'm looking for like straight selling because you see here how like we're selling and all that stuff, but we keep pulling back. That pullback can be dangerous enough for us to blow our accounts or get stopped out while the market continues. So I'm just waiting for like a very nice continuation into it. So I'm just waiting for the right questions to be asked with the right answer. And depending on the momentum that we get, I'll just take it. But I'm looking for aggression into that push. All right, so I'm looking at the markets on my other monitor. There's not enough yet. We're seeking lower, but I mean, look at it. You see what I mean? We're still bouncing up. So we're just waiting for that really, really strong bounce there or strong rejection.
high as we would have expected it to move up.
Don't worry, guys. I'll let you guys know when I answer. Right?
The pass through of the tariffs
Because
into
right now, for
inflation
example, if you guys look at the markets, if you would have entered right now, you would be down about 40 to 50 points. You know what I mean? Off nothing. You get what I'm saying? So we're still waiting on like a very strong move and the right question to be answered. So that's why you got to listen up.
to acknowledge that the risks to the other mandate have grown and that we should move in the direction of neutral. So what will we do? We'll do what we need to do, but we have two mandates and we try to balance them. For a long time, our framework says that when our two goals are in tension, this is quite an unusual situation, how do we decide what to do? Because our tools can't do two things at once. What we do is we ask which is farther from, how far is each from the goal and how long is it expected to get to the goal? So, and then we think about those things and we see as I mentioned, we have been our
Yeah, look at that
policy
full-on
really
reversal there.
skewed toward
So the market
inflation
seems
for
to be
a
liking
long
what he's
time,
saying.
really. Now we see that there's downside risk clearly in the labor market.
Let's see if we can hold this up, and maybe I might look for longs, but nothing yet.
How concerned are you about the slowdown in the jobs market for households at home, especially younger Americans struggling to land a job?
So it's an interesting labor market, and obviously we think it's appropriate that we reduce our rates so that we become more neutral, which presumably will be better for the labor market. You see people who are sort of more at the margins, so kids coming out of college and younger people, minorities are having a hard time finding jobs. The overall job finding rate is very, very low. However, the layoff rate is also very low. So you've got a low firing, low hiring environment, and the concern is that if you start to see layoffs, the people who are laid off there won't be a lot of hiring going on. So that could very quickly flow into higher unemployment. In a healthier economy, healthier labor market, there would be jobs for those people. But now the hiring rate is very, very low. So that's been a growing concern over the last few months. And it's one of the reasons why we think it's appropriate that we begin to shift our policy focus toward a more balanced one.
Steve Leisman, CNBC. Mr. Chair, in the past, during rate cuts, you used the word recalibration. And I wonder if you pointedly did not use it this time. And in fact, when you said policy is not on a preset course, did you mean that as sort of the opposite of recalibration? Are we meeting to meeting, data point by data point? Are we in the process here of getting back to neutral? Thank you.
So I think we're in a meeting by meeting situation. We're going to be looking at the data. You know what? Let me say a word about the SEP really here. So we often point this out. What the SEP is, it's an accumulation of the individual projections of 19 people, showing what they believe at a particular moment in time to be the most likely path for the economy and thus the appropriate path for monetary policy as well. And as you know, we don't debate or try to agree on what that is. We just write them down and accumulate them. We do sometimes discuss them. And so we always say we're not on a preset path, and we really mean that. The actual decisions we make are going to be based on the incoming data, the evolving outlook, and the balance of risks at the time the decisions are actually made. So you will have seen that we have 10 participants out of 19 who wrote down 2 or more cuts for the remainder of the year, and 9 who wrote down fewer than, in fact, in a good number of cases, no more cuts. So rather than looking at this as certainty, I would encourage people, as always, to look at the SEP as through the lens of probability. And so there are different possible outcomes and likelihoods rather than this one is certain and this one isn't happening. So that's what I would say.
Thank you for getting to my follow-up question, which was, is the dispersion in the outlook a sign of uncertainty of policy in the meetings to come? Thank you.
You know, so far, nothing.
It is such an unusual situation. Ordinarily, when the labor market is weak, inflation is low. And when the labor market is really strong, that's when you got to be careful about inflation. So we have a situation where we have two-sided risk. And that means there's no risk-free path. And so it's quite a difficult situation for policymakers. And it's not at all surprising to me that you have a range of views. It's not so much about having different views for the path of the economy, but it's partly that. But it's also partly about what's the right thing to do in light of the tension between the two goals. How do you weight them? How worried are you about one versus the other? And so it's natural. I think it would actually be surprising if you didn't have a pretty wide range of views based, in this kind of highly unusual situation, and we do. So, but we get together, we discuss, we have a great discussion, and then we decide what to do and we act. But you're right that it's a wide dispersion of views, and I think that's understandable and natural in the current situation.
Hi, Victoria Guida with Politico. You've talked a lot about Fed independence and the importance of it over the years, but as markets have questions about what exactly President Trump's intentions are with the Fed, what would you point to as the things they should be watching to determine that the Fed is still making decisions based on, the economic outlook rather than political considerations?
Look, it's deeply in our culture to do our work based on the incoming data and never consider anything else. That's just, everybody who's at the Fed really feels strongly about that way. So, you'll know it by the way we talk about what we're doing, by the speeches that people give, by the decisions that we make. You'll know that we're just still going to do that. That's all we do. And we don't frame these questions at all or see them in terms of political outcomes. I think when you get to another part of Washington, everything is seen through the lens of, does it help or hurt this political party, this politician? That's the framework. And I think people find it hard to believe that that is not at all the way we think about things at the Fed. We're taking a longer perspective. We're trying to, serve the American people as best we can. So I think you would be able to tell. I don't believe we'll ever get to that place. I would say we're doing our work exactly as we always have now, and people they're making their arguments, and we're having really a great discussion around these challenging issues. So.
Do you see the court case around Lisa Cook as being related to questions of Fed independence?
I see it as a court case that it would be inappropriate for me to comment on.
Nothing
Mr.
yet,
Chairman,
bro.
Edward Lawrence from Fox Business. So we saw the preliminary benchmark revisions down 911,000. The revisions for June were the first negative revisions we've seen since December of 2020. How can the Fed base important decisions on rate and what to do with the interest rates on data that seems to be, as you've called it in the past, noisy?
So on the QCEW, the revision that we saw was almost exactly what we expected. It was amazing how close the expectation was. So, and the reason for that is, for the last bunch of quarters, there's been almost a predictable overcount. And I think the Bureau of Labor Statistics really does understand this, and they're working hard to fix it. It's got to do, of course, it has something to do with low response rates, but it's also got to do with what's called the birth-death model, because a good amount of job creation happens around new companies and how many go out of business, how many are founded, and it's just really hard. You can't survey for that. You've got to have a model that predicts that, and it's quite difficult to do, especially when the economy is undergoing big changes. So, and they've been working on that and are making progress on it, but the data we get is still good enough for us to do our work. To the extent we have issues around data right now, it's about low response rates. That's happened all over really. Response rates are just lower to surveys now, both in and out of the government.
Dude, this is, guys, I'm positive. Bro, this is tricky, bro. Like, you guys don't understand. I haven't said a word because I'm so locked in. But like, every candle is down 100, up 100, down 100, up 100. Dude, I'm trying to catch the right move for you guys, bro. So I'm like super patient here, super locked in. But yeah,
it's not a mystery. That's what it takes.
One candle's all we need. That's what I'm saying, bro. But I need to catch the right one.
In the case of the job creation, the response rate is quite low for the first month, or lower for the first month. By the time you get to the second or third month,
it's not only that the candle is, we need to time it right, because he could say one thing that's bullish 1 second, and the next guy that asks a question could be bearish, and we go right back down. So I'm trying to time it.
So it's not that we don't get the data; it's just that we get it a little later.
Yeah, no, dude, we are ripping, bro.
Well, for the benchmarks, if that holds, it's 51% of the jobs.
I don't know if I want to trade into this direction.
Shows a weaker job market.
Let's see if we can get some more continuation to it, like more momentum.
Had that information, would it have changed your mind related to where the interest rates should be? Should there have been a cut earlier?
We have to live life looking through the windshield rather than the rearview mirror, as you know. And all I can tell you is we see where we are now, and we take appropriate action. And we took that appropriate action today.
Thanks. Howard Schneider with Reuters. So, as you mentioned a minute ago, some margins of the job market would suggest that the slide's already happening. Black unemployment rate in August was above 7%, declining work week, difficulty among college graduates finding work, rising youth unemployment. Why do you think a quarter percentage point now is going to arrest that?
Well, I didn't say that I thought a quarter point would make a huge difference to the economy, but you've got to look at the whole path of rates, right? And the market's has already been baking in expectations. I mean,
Three.
our market works through expectations, right? So I think our policy path really does matter. And I think it's important that we use our tools to support the labor market when we do see signs like that. I did mention that, you see minority unemployment going up, you see
Guys,
younger
look, hold up.
people.
What I want to say is, look, guys, look at your chart real quick. If we can't find a buying opportunity anywhere around here with the news that comes out, if we can break above, maybe like go on your chart real quick. If you could break above 24,454 or 455, I might look to take longs above there. That's if we don't catch anything in the meantime. Because right now I'm really tempted to go long, like really tempted. I'm just really hesitant,
Process. So we put
especially a
all
lot of
this
pressure
together,
by you guys.
and we see that the labor market is softening, and we don't need it to soften anymore.
The
Don't
thing is,
want it to.
it's not even about the timing, or no, it is about the timing. That's the thing. I need to time it right. Because even if we go into the right move, one little pullback could be a big pullback. You know what I mean? So
It's not just one action.
As a follow-up to that, the growth mix right now seems very concentrated in investment and on the consumer spending side in the higher income groups. Do you feel that that's an unsustainable mix for the economy moving forward?
I wouldn't say that. I mean, you're right. Those are two. We're getting unusually large amounts of economic activity through the AI build out and corporate investment. I don't know how long that will go on. No one does. In terms of spending, you saw that the consumer
we just
spending
keep
numbers
seeking higher, bro. I might look to take
well
longs
above
around here.
expectations,
I actually
and
really
that
want
may
to.
well be skewed toward
For the few counts at least.
higher,
Let me see what this next candle does.
consumers. There's a lot of
Yeah, it's just timing, bro. That's the hard part, bro.
nonetheless. It's
Because like I said,
spending.
even if we do trade it into the right direction, it's just the timing.
It's moving along. Economic growth is going to be 1.5 in the
Yeah, dude, we're
1.5%
ripping,
or
bro.
better this year,
Guys,
maybe a little better.
I really want to. I want to so bad, bro. I might just say fuck it and just go for it. The longer I wait, the more money I'm leaving on the table. It's just, let me see if this. This is why I don't like trading news, bro. Fucking hate this shit, bro.
Hi, Stephanie Rule, MSNBC.
And anytime someone new asks a question,
Treasury
bro, it's
Secretary
I get it.
Scott
We were pumping up X amount of points, but now if she asks a bearish question, we go right back down, bro.
Institutional bloat. He's now calling for an independent review. Would you support an independent review?
Sizing less? Oh yeah, bro. What? Way less, bro. I'm gonna do like 3 micros, 5 micros. I don't know, around there.
Of course, I'm not going to comment on anything the secretary says or really any other officer says.
Because look, same way we were going up.
So
Look
in
at that. The
terms
candle's
of
about to go red.
reform
You know
at
what I mean?
the Fed,
So it's all about the timing.
we
boys.
just
Makes
went
me
through
nervous, bro.
a lengthy and I think very successful process of updating our
Let me see if this candle can show a little bit more buying pressure. I'll do longs.
I would
All right,
say
but
there's
for
a
now,
lot
just
of
holding back
going
still.
on behind the scenes.
You can't see your chart. I know, bro. Once I'm about to get in, I'll put the chart back up. Don't worry.
Federal Reserve system, and at
No, not minis, bro. Micros. I'm doing very light size if I do take anything here. I remember, guys, it's gonna be a gamble. Dude, look at that. Straight buying up, bro.
The whole Fed, including the board and all the reserve banks. The employment at the Fed.
Bro, I'm risking it, bro. Guys, I'm in longs here, bro.
Basically at the
I'm in
same
super
level
light here.
as
Let me put up the chart then.
years ago. So we will have had zero.
Hold up. Let me
job
pull up.
growth.
Guys, I enter longs. I enter longs.
With that, and I think we'll probably do more than that. So
All right, we don't need Powell anymore. We got the entry. I got to fill at. Oh my god, I'm up. Oh my god, I'm up like crazy. I got to fill at 428, guys. I got to fill at 428. But yeah, man, this thing is. If you guys want to scale out quick, bro, you guys can do whatever you guys want. But yeah, I'm gonna try to get out as fast as possible just so I can make something for today, and then just get off. Bro, my heart doesn't rate any faster, bro. It's like fucking news, bro. I hate trading this shit. But I gotta do what I gotta do. But yeah, once again, guys, we're looking to get in and out quick. No ifs, no buts. We're not looking for like a million points here. We're just looking to make something for FOMC and get off. Because this trade makes you nervous, bro. Anything could happen here. Yeah, let me pull up the Powell stream on my phone just so I can watch it for myself. Because I know you guys want to focus more on the trade. Let me see FOMC live. I'm gonna take off my headphones.
So it's probably a number of things, but yeah, it's probably a factor. Hard to
I'm gonna say I'm gonna have more of like a mental stop loss at like maybe like minus 700. I would say that's fair. Around there. Is he made 575 on 2 accounts? Yeah, but that's not bad at all, bro. I'm gonna look to make like 300 and then get out. Or if we can break above this candle high, or maybe you guys remember the level at 454. If we can break above that and hold above it, I'll just get out. Did you agree? Yeah. Like I said, I'm just trading a few. I'm not trading all of them. Because I'm gonna request a payout today. I just want to make a little bit more extra money on it. Back secured. Yeah, like I said, if we could break above like 454, I'll take it. Any reason why my order got rejected? You're probably trading the wrong contracts. Remember, you have to be trading MNQZ. Let me get 300 on these accounts, bro. Come on. No, you're probably just on the wrong contracts. Switch them quick. Come on, bro. Let me see 300 on these. Which way? It's on the screen. 5. There we go. I'm out. I'm out of these guys. Quick scalp, $300. How many points is that? Like 30? I'm out, guys. I'm out of that shit. I hate trading news, bro. Y'all 500? Nice, guys. Did you guys get that? I know it wasn't anything crazy, but dude, it's just, bro, timing the market here, bro, it's so fucking hard, bro. Because of news, there's nothing technical. It's all fundamentals. So, like I said, 1 second it could be bullish, the next second it could be bearish as fuck. So yeah, up 980. Nice, guys. Nice. We're still going, so if you guys are gonna hold it, I mean, nice, but dude, what a relief, bro. I do not want to go through that shit again. And we stop my recording here. There you go. Okay, so yeah, are you guys green? Very, very nice. Still holding? Nice. Bro, Jacob. Dave wants to re-entry? No. Don't ask me about no re-entry, bro. But yeah, guys, if you guys are green on this, which everyone should be green, if you guys listened and paid attention closely, even if you got a late entry, we're still at the highs. Guys, post those profits over in the profits channel. Oh, wow. Dude, I have not been that nervous since like me trading in high school days, bro. Because I haven't traded FOMC in years, bro. I feel you. Nah, bro. No, look, bro. Trading FOMC is something. Trading in front of over 400 people is something else, bro. Because even if I put out a gamble trade, if it goes wrong, I'm gonna get attacked, bro. So thank the Lord it went up. But yeah, man. Let's get here. Where do you catch? We caught NQ longs for. Let me see. We entered at 428. I took profits at 460 for 32 points. So not bad. Not bad at all. What new contracts do we switch to? MQZ. You did great. Thank you. Yeah, a lot of patience. Definitely a lot of patience. But yeah, we caught something. We at least caught a portion of the move. All right, you're holding my breath. Me too. 1,000 on a live account? Nah, that's crazy, bro. But yeah, guys, if you guys are green, guys, go post those profits over in the profit channel. We are still going up like crazy. So yeah, wow. Oof, we are going up a lot. Yeah, bro, I reject them out. I already told you guys. Switch over. Make sure that your contracts are set to MNQZ. Yesterday we went from trading MNQU 5 to MNQZ 5. You got out too early? Don't worry. Anything that you catch in this market, be grateful for it. Because trust me, 1 second it could look really good, and the next second it could look horrendous. All right. So yeah, just let me see. I was bragging on you today. I learned a lot about patience. Yeah, I mean, no, I'm not gonna lie. Today it's the patience, guys. My heart is racing, bro. Like it's never. It never really races during trades because I'm kind of used to it. But dude, wow, bro. Anyways, yeah. If you guys just win, maybe take profits. All right, guys. It's a news trade. Don't hold it for like 1,000,000 points. And yeah. Wow, we are ripping. Bro, oh hell nah, bro. You might as well just long one micro, bro. I got you, Anthony, bro. I got you, bro. What time are we trading tomorrow? Same time as always. 9:30. 9:30. Guys, I'm not gonna lie, nothing happened for FOMC, bro. Literally nothing happened. Just a dramatic price back to like nothing happened. Why? I already told you guys. It's priced in. The markets were priced in already. But very nice trade, guys. Very, very nice trade. Oh, I should have held it. Nah, don't think like that. Anyways, but yeah. Other than that, man, same as nah. We don't think like that, bro. We don't look, bro. We made money, bro. We got our share of the market until tomorrow. Now, on the bright side, guys, now that we know that we're getting rate cuts, that could make the market a little bit more bullish, a little bit more volatile. A lot more investors are going to be interested. So tomorrow, maybe we get a really good market. All right, guys. Maybe tomorrow. Today's Wednesday, right? Yeah. Tomorrow and Friday, we could get a very, very good market. All right. Yes, gender. Yes, bro. You gotta let out the stress, bro. Thank you, David. You're the go. I got you, bro. I got you, guys. Guys, and by the way, don't give me credit for the trade. I mean, well, you know what I mean? Like, I did say I was in longs, but remember, guys, it's not really like we read anything correctly. We just stayed patient. We waited for the market momentum. As you guys see here, we got a lot of buying pressure, a lot more here. We entered here into the momentum to the upside. That's what I was telling you guys to wait for, because obviously, why would we want to trade here, here, and here when the market is going up, down, up, down, up, down? It makes no sense, right? So we waited for the momentum. We found it here. We entered here. We got 30 points. Right now, if you're still holding, we entered at what? Like, if you're still holding, you should be up about 80 points. But for the most part, we caught the right move here. All right, guys? Somebody explain how to calculate this? Calculate what? Wait, what? Like how much more you would have made if you held it? He went over 30. Wait, what's going on? Oh, how much more do I have to make since I'm over 30%? Wait, more? Less, you mean? Wait, what account are you on and how much did you make? And are you on EVA or PA? Pass EVA? Guys, if you guys are green, guys, go ahead and post your profits over in the profits channel. All right, guys? Post those profits over in the profits channel. He's on Apex. What account? And PA or EVA? And how much did you make? I need that information. 50K? Okay. Thanks for today. Up to 100. Nice, guys. Nice. Guys, once again, if you guys are green on the day, guys, go post your profits over in the profits channel. All right, guys? I'm green today. Nice. That's what I like to see. Although we gambled a little bit, at the end of the day, we're happy with it. You know what I mean? You made 3K with gold. Dude, honestly, I should have traded gold. He's on the PA. Okay, and how much did you make? $900. You're good. Yeah, you're good. Stop trading. Stop trading for today, but you're good. Apex, they have a strict 30% rule. Actually, not as strict, because if you make like 900, you're good. But if you make like 1,000 or more on the 50K, then you could get into a little bit of trouble. Not trouble, but you might just get the payout denied. Let me see. Any entries for MQZ? Nah, bro, we're done. We're done, dude. We're done. We caught a portion of the move, bro. That's all we needed. YouTube, how you guys doing, man? How you guys doing? I made 900. Let's get it. Nice, man. Nice. I took the trade too, by the way. Nice, guys. Guys, once again, I'm gonna say it one last time. If you guys are green on the day, guys, go ahead and post your profits over in the profits channel, guys. All right, and at me if you guys can. All right, if you guys are coming from RP's server when you guys are on YouTube, you know, at me in the profits channel so I can get some credit. And if you guys are in my premium, go ahead and post it in my server. All right, guys. But yeah, so I wouldn't be enter. Well, you could still enter, but I'm not gonna trade, dude. I'm done, bro. That thing was super stressful. Let me see. Someone said take a loss. Oh yeah. So look, if you guys exceeded the 30% rule on a PA account and you're stressed about getting your payout denied, just take a little loss. Yeah, you could take a little loss, get back under the 30% rule, and you'll be fine. I think it counts during the end of the day, right? So if the day ends while you're up over 30%, it could be a little bit of an issue. But yeah, my 50% is 1,500. So I'm assuming you're on Top Step, right? Chiza, I think that's your name. Yeah, you're on Top Step. 50%, 1,500. Yeah. But yeah, other than that, guys, I guess we made our money for today. So yeah, if you guys are green, you guys are free to get off and enjoy your day. All right, guys, I will be on tomorrow. Fingers crossed. I'm hoping, I'm expecting a better market than usual for tomorrow. I'm expecting a lot more volume, a lot more everything. So tomorrow, be on the stream, all right, guys? But yeah, where do I check the specific account rules? Just search up Apex PA rules and it'll come up. It'll be like a whole list, all right? For those on Top Step, consider locking yourself out. Oh yeah, no, the day isn't even less than an hour. You guys can just get off and not even lock yourself out. Just go enjoy the day. Can you explain a bit more into detail about the 30% rule? I got you. Here, let me send it over to you. One sec. I have the picture here. One sec. Right here. Let's go. Just go based off this. Right here. There you go, chop. Yeah, guys. Other than that, man, I am off for today. I'm gonna go. What am I gonna do? I don't know. I'm gonna go figure it out. But guys, I'm gonna get off stream. All right, guys. Hopefully you guys enjoyed the stream. Hopefully you guys made money. And yeah, other than that, man, I'll see you guys tomorrow. All right, guys. Peace out, guys. Take it easy, guys. Peace, peace, peace. And YouTube, guys, hopefully you guys made some money with us. Guys, today I gave you guys, I lowered the delay on YouTube. Typically I trade with a 2-minute delay, but today I set it to 30 seconds. Guys, if you do want to join the premium to get access to real-time alerts like the one from today, the one from yesterday, the one from before, and so on, real-time live trading, real-time classes, real-time education, and so much more, guys, click the first link in the description and you guys see the pinned message. If you guys use code 80, which is code 80, it will apply 80% off the monthly premium, which will make it only $10, guys. That's cheaper than a Big Mac meal, bro. You know what that is, guys? So yeah, guys, if you guys want a chance to better your trading and better everything, around, making money and everything, you guys can always join the premium with the first link in the description. I'm gonna send it over in the chat. But yeah, with code 80 on the monthly premium plan, it will apply 80% off, which will make it $10 only. So yeah, if you guys enjoyed the trade from today, the live trade from today, or the previous live trading sessions from whenever, you guys can always get more by clicking that link in the description. All right, guys. But other than that, man, I'm going to go ahead and get off, and I'll see you guys tomorrow at 9:30. All right, guys. Let's keep catching some more trades. We are still currently on this 3-week winning streak with 0 losing trades. So let's make this a month next week. All right, guys. So tomorrow and Friday, we still need 2 winning trades, and then next week we'll get that 1-month winning streak. All right, guys. But other than that, man, I'll see you guys tomorrow. Peace out, guys. Take it easy. Stay safe, and I'll see you guys tomorrow. Peace.